Well, speaking of companies, let's use one that it sort of illustrates this, and it's Jardine Matheson. What does the company do?
So Jardine Matheson is effectively a holding company based out of Hong Kong. The company logo is a thistle, which is important to kind of correlate to the management team. So it's run by the Keswick family, and we're on the 5th generation of CEO from them. And I talked about being a student of history. It's really helpful to us to be able to understand how cultures have evolved at companies over very long periods of time and how the returns have been delivered. So we can go back and see for the whole time that the Keswick family have been running Jardines, how have they done and how have they treated minority shareholders? And it's generally been very good. Compounded capital for a very long period of time in a very responsible way. So they communicate clearly, they treat people very fairly, you know what to expect, and they also show themselves to be great stewards because as a holding company, they own stakes in a series of other businesses, and you can see that each of the businesses they've invested in have generally been good businesses too. And their job as capital allocators is to allocate capital to the next good idea and help those businesses grow. And that's what they've been able to do across many businesses, different regions. But the broad trend has been they've added value from an economic perspective. And so that we find that a very interesting governance structure to be involved with. So if I walk through kind of their big assets, it's helpful. So they own Astra is a big driver of their returns. It's a big Indonesian conglomerate. It tends to have an involvement in many things in the Indonesian economy, but it's got a big exposure to motor dealerships and also the financing arrangements of those, which has tended to be a good business over a long period of time. They've got Hong Kong Land, which is the kind of premier real estate developer in Hong Kong. So they own tier 1 offices, tier 1 retail and tier 1 residential. So very high quality residential real estate business. They have DFI Retail, which is the franchise owner of IKEA in Hong Kong and Taiwan, and also 7-Eleven in Hong Kong. They are terrific retail assets. And then they've got a tail of smaller things. Probably the one that stands out is Mandarin Oriental. So the premium hotel brand across Asia. Now, all of these are quite interesting standalone businesses, and they're often listed in their local markets. So they have a kind of a listing, and then Jardines owns a big stake. So you can see what they're worth. You can see what investors in Indonesia are willing to pay for Astra and what investors in Hong Kong are willing to pay for Hong Kong Land. You add up their stakes and you get to a value of about $18 billion. You say, okay, well, I don't own any of those companies, frankly, because I've got a good management team overseeing the portfolio. When you buy Jardines, you pay 12.
Oh, wow. Big discount.
Big discount.
Yeah.
Now, holding companies can attract a discount, but typically the discount's there because people don't trust the management team. Because they've done something. They're either serving themselves above minority shareholders or they've destroyed value through capital allocation over time. Here, we have a management team who've proven to add value over time. And so the rational thing to do might be to pay too much. That's not going to happen. But we don't think that level of discount is justified at all. Now, I can't explain why the discount is there. I think it just reflects the negative sentiment that you've got, from global investors towards emerging markets. But one of the things I've learned over time is that sometimes you do see $5 on the floor, right? And sometimes it is $5. And not to question it too hard when you do, but to just make sure that you own that for your clients, and then you wait. And sometimes you wait a long time. But generally, if you buy things which are at very good value today and are increasing in value over time, that's going to lead to a good outcome.
Yeah, wow. Nice.
So when you look at that discount relative to the listed sum of its parts, how does that discount compare, the discount today compared to like it historically? Like, has it always traded at that sort of like...
No, it's been extending over time.
Yeah,
and you can kind of correlate the discount to where you see emerging markets being discounted for developed markets. So you can understand that sentiment is playing into it.
Okay. So that like then you would expect that over time it mean reverts back to...
That would be part of the way we could earn a return, but also just the businesses doing well will drive the return as well. And so I talked about earlier with Smurfit about having a number of levers to getting return out of the stock. I think you've got the same with Jardines, where you've got the underlying business is doing well, and then you've got the discount closing. So you can kind of add the levers up, and that gets you a nice return.
So the thesis then is the management team, the quality of the business is underlying it, the discount there mean reverting. Is there any other elements of the thesis that we haven't covered?
I think for a global investor, it's what it's not.
Okay, what is it not?
So it's all the things we talked about at the beginning of being kind of the danger signs. So it's not a US growth stock with a big tech angle. And so it's very diversifying to an area of the market that I think is clearly hot. If you can own a series of those, I think you're probably better served over the next decade than you have been over the last.
What are some of the risks or red flags that you keep an eye out for companies like this?
It's really about a conversation with management, how they're thinking about the business. And what we want to see is that they talk transparently and with integrity about the decisions that have been made in the business and what that's resulted in. So an honest appraisal of what's happening in the business. That's very Buffett-like quality. But then there would just be their commentary on what is happening in the world. And we appreciate that people make mistakes. Like some things are unknowable. But to be able to hold your hands up and say, we're not sure, and so this is how we're thinking of structuring our investments in this area. Or this is how we're thinking about the auto market in Indonesia in the face of Chinese EV competition. And we want people to be demonstrating that long-term shareholder-friendly mindset. So not panicking when it's a cycle, but also being realistic about where business is being disrupted or where you have structural change. And then kind of calibrating their capital allocation decisions to that conversation. And so that the conversation we're having with them is reflected in the business over time.